Yeah, what's up guys, what's going on? Welcome back to my channel. Hope we are good. All right, another candlestick pattern episode. This should be the episode 3 in this series of candlesticks. I believe by now you're already seeing some of the in-depth breakdown or how you can actually leverage on candlestick patterns, okay, without just depending on the general knowledge you have there. Adding more stuffs, confluences, in order to take your trade or make a better entry using candlestick pattern. All right, so today we are going to be looking at another important and interesting candlestick pattern, which is popular and today's video is going to be mind-blowing. All right, but we are going to be taking advantage of the trend. We are going to be taking advantage of understanding the correctional movement or pullback or retracement, then combining it with the candlestick. So this is going to be powerful, guys. So before I proceed with the video, if you are new to my channel, you know how we do it. Just smash that like button for me and also subscribe. Okay, subscribe. All right, so having said that, my returning subscriber, you guys know I actually appreciate your effort so far, so you're welcome back. Don't forget to always leave a good comment in my videos. If the video is not interesting, check another one. You're definitely going to find a video that is interesting in my channel. There's no two ways about it. All right, so the candlestick we are going to be looking at today is called the hanging man or hammer, depending, I don't know, whatever you call it, okay, but I see some people call it hanging man, hammer, long weak candle. These are the names, but I'm not here to teach you name of candlesticks. What we are here to do is just to know how we can use them profitably. Okay, so we have the bearish, bullish, and we also have the bearish one. So it all depends on what you see. Okay, so what we are interested in here is how to take advantage of this candlestick patterns. Okay, so you also have something like this also, and something like this also. You just have a kind of weak to the upside, right? So this also the same thing. Okay, for me, this is different from doji, right? This is very different from doji. Let me do this again here, so you can have this one, something like this also. So doji is this is doji, right? Like the opening and the closing is almost the same place, like it's at the same place or almost. So this is a doji. You can still have it as bullish. Okay, you can still have it as bullish. So doji, the opening and closing is almost at the same place, but this is very different from the doji. So why I'm doing this is that you shouldn't confuse the two. Okay, so what we are going to be looking at today is this one here. Okay, we are going to be looking at these two, not this one or this one. Okay, so now first we are going to be considering the trend. When the price is pushing to the upside, okay, you are looking for signals to buy, right? When the price is pushing to the downside, you are looking for signals to sell. So this information is vital. Okay, it's very vital. So when you see the price pushing to the downside, what we are going to be doing is to start looking for opportunity to sell. Okay, if the price is pushing up, we look for a opportunity to buy. So let's go to the chart quickly. So I use 4 hours for this candlestick identification and all that, so you just have to note that. So now if you look here, the price is pushing up, there is no argument. Okay, the price is up, the price is up. This is a strong bullish market right here. So all we need to do now in this bullish market is just to start looking for these candlestick patterns and be able to know where exactly are we going to be where exactly are you going to be buying. Okay, everything we are doing here is buying. So, and why I'm sharing this is for you to filter out the best ones, for you not to be in those fake signals. Okay, now if we are buying, there is another thing that is important whenever you are using this candlestick. Okay, now, or this strategy, you want to make sure, okay, that there must be a retracement before the candlestick pattern formed. So there must be at least 2 consecutive bearish candle before you start looking for that candlestick pattern. Okay, before you start looking for the candlestick pattern, there must be 2 consecutive, at least 2 consecutive. If you have 3, good. If you have 4, 5, but it must be up to 2. So what I mean is that there must be 2 consecutive bearish candle before the formation of that particular candlestick, which is the hanging man or the hammer, anything, right? So you can see, this is why I'm doing this. Why I use this is because we believe, or we have seen, not just believing, that this particular trend, this is an uptrending market. So at this point, this will now be a pullback, right? This is now a pullback. So we are now seeing 1, 2, 3 consecutive candle. So we're expecting another push to the upside. Okay, that is exactly what we're expecting. Okay, so but the common way to do this, trade this, is just for you to buy at the closing of this place. Okay, but that's not what we are going to be doing, right? That's not what we are going to be doing, because most time it doesn't happen this way all the time. But just note this: one, you have seen that the price is trending to the upside. Okay, the trend is up. Okay, first of all, you need to wait. After discovering the trend, you need to wait for a retracement, which might happen with 2 candles, bearish candles, or 3, 4, 5, 6, depending, or mixture of bullish, bearish candle. But before the particular candle we are looking for formed, we want to see 2 consecutive, right? So what I mean is that, let me just clear this, explain this very well, take my time here. If the price is pushing to the upside, let's say this way, okay, I'm just doing so if the price is pushing up to the upside this way, you can have this, and maybe somewhere here you have a bullish candle, another bullish candle, for instance, and you might have also continuation of bearish candle. So at this point, if you see the signal, you are taking it. So it must not be that the retracement will just be all bearish candle. You can see mixtures of bullish candle in the middle, but what we are saying is that before that signal, we should have at least 2 consecutive bearish candle that give birth to the signal. So now this candle could be bullish candle, this particular hammer could be bullish or bearish. Okay, it could be bullish candle, it could be bearish candle, we don't care. What we are looking at is the pattern. Okay, so I hope this is clear. So now let's go to the chart. So we have confirmed this as an uptrending market, good and fine. So what is the next thing? We want to see a retracement. Okay, we want to see a retracement. Each time we have a retracement, we check if there is any candlestick pattern forming at that zone. So from here you can see we had one, but the problem is that the retracement there is just one candlestick, one bearish candle. Okay, so this is the candlestick pattern we are looking for, which is this one right here. Okay, but the problem is that the retracement, okay, that's happened is just like one candlestick. Okay, so we are likely not going to be taking this. This is not the best one. So you can still try to take this, but I'm telling you that this is not the best one for me. I've tested it. You can just check it yourself. Okay, so let me just use the one I think is the best to explain what I want to explain. Then we can go into both the this type and the best one. Okay, so let's go back to see here that there's no good one. We have that candlestick pattern, but we don't really have like the consecutive movement. So let's see at this zone. So you can see the price drop, you know, pull back to this zone. Okay, we have the bearish, bullish. Okay, then we have bearish, bearish, bearish. So we have the consecutive candles here, and after that we discovered our candlestick pattern. After that consecutive, this then after consecutive bearish candle, which is sell, and we are looking for buying. So we now see this candlestick pattern right here. So the question is, are we going to just buy at this zone at the close of that candle, like the normal thing everybody's doing? The answer is no. We are not going to do that. For the fact it works here doesn't mean it will work everywhere. Okay, so but the information I've given you already can even help you to even trade this way profitably without adding the extra stuff I want to add to you guys. But if you understand what I explained, first to identify the trend, second to wait for a retracement, and make sure that in that retracement before the candle forms, there are at least two consecutive bearish candle for a bullish market like this. This information is enough for you to even start making money with a random, that's the random entry that everybody's doing. All right, this is now you adding extra stuff. Okay, not just seeing a hammer and you are entering your trade, but you also identify the trend, wait for a pullback, and check for consecutive opposite candle before you start making entry. So this is an interesting one already. Okay, so but the extra stuff I want to add is just to also manage your entry, to know the exact point you are going to be making your entry, right? So when you have marked out this, once you see this, instead of just making entry, just simply go down to a lower time frame. So let's use 15 minutes time frame for our entry. So you can see where I marked. So I'll just go down to 15 minutes time frame quickly. Then this is 15 minutes time frame. What do I have to do? I will simply, before the, you know that we had retracement, right? So in that retracement, there must be, we need to see a trend, like a bearish trend at that zone, which will help you to put in your trend line, right? It will help you to put in your trend line. So once you see something like this, just put in your trend line, as simple as that. And what do you have to do? Simply wait for the price to break your trend line and you make your entry. Okay, just make your entry at the break of trend line. Okay, sometimes you might get break and retest, but if you don't, just this one, I'm not suggesting, like, you know, this is my personal opinion, so you can back test these things to confirm whatever I'm saying. So this one, I'm not suggesting that you wait for retracement. Okay, once the price break your trend line, you can make your entry. Just set your stop loss the right place, either below the swing, which is below that wick down there. So, and you know, you hold your trade. This is exactly what you are going to be doing. All right, that's how simple it is. You have already checked the trend. Remember, the most important thing, you have checked the trend, and you have waited for a retracement. Then in that retracement, you have checked if you have three consecutive or two consecutive, at least two consecutive opposite candles. Then after that, you start looking for entry on a lower time frame. Okay, so let's push and see if we can get more stuffs here. So there is no, I'm still looking if we can get another example here. There's no consecutive. We are looking for retracement. Look at the retracement. There's no signal right there, even though the price pushed up a bit, but we are not taking that because we know the conditions we are looking for. Okay, so but I'm taking that is a doji right there. Okay, so I'm going to be bringing videos on doji, guys. Okay, so let's say you want to trade against the trend. For instance, this is an uptrending market. Okay, and in you discovered something. You had consecutive candles opposite. Remember I said opposite consecutive candles before the pattern. So you can see this is our pattern right here. Okay, this is our pattern right here. So you can even use it to trade against the trend and it will still work if you consider those things I've mentioned. Now, if you are trading against the trend, that means you are removing the trend now in the condition. You are looking at the 2 or more consecutive opposite candle before the pattern. So if you look here, we have the bullish is even more than 4 consecutive opposite candle before the pattern, right? So what you need to do is simply go down to a lower time frame. That's the game. You go down to maybe 15 minutes time frame again. So and check, okay, if you can get a good trend line, okay, for you to make your entry. Okay, so you know we are looking for selling now, right? You simply pick a trend line, draw, okay, draw your trend line. And what are you going to be waiting for? You want the price to break your trend line before. So you want to make a trend line at the zone of that formation so that you'll be sure that the price breaks your trend line before you start making entry, right? So this thing will just be like, oh, it have played out. That's the reason. But let me tell you, if you be able to filter out what I just explained, whether it's live, what I'm teaching you is something you can go and check. So it's not like you just depend on the information I'm giving you. You go to your chart and take your time, go and backtest, and also trade this live. You can even use demo account. You have demo account, you use it and trade it live to see how these things work. Use it, and even if you don't want to trade, you must not use the demo account to trade. You can just stay in a live chat, mark up these things and watch them, see the effects, see what happened after the whatever I'm teaching you. It's not that you have to just maybe run into your real account and start trading the strategy. You still have options of going to your demo or doing it on a live account. Just mark out the stops, your setup, and wait for it. Maybe in 2 hours, 3 hours, 4 hours, you come back to see what the price movement. Okay, so from there you'll be able to build confidence. Don't just depend on information you have maybe out there. It could be on YouTube, it could be on mentorship, it could be on different websites. You just have to test these things yourself to see if this thing is actually working well the way you want it. It might be working well, but it will not be working the way you want it. Then you kill it. You look for other stuffs. Okay, so that's exactly my suggestion. So look at another one here. So you know we are pushing to the upside and we are having this signal, right? So what we have to check, this is an uptrending market, good and fine. One condition, then checked. The next one is we had a retracement, checked. Then before this candlestick formed, we have consecutive opposite candle, opposite or bearish candle, because this is an uptrending market. Good, checked. We have everything in place. So what we need to do now is simply go to a lower time frame and see if we can get our entry using a trend line or any other trading pattern. But you know, mostly it's likely going to be a trend line. So you can even see this setup and you're still not taking it because the conditions and everything you are waiting for, you are not seeing it. Okay, so if you look here, this is the zone. This is the zone. So the question is, where are we making our entry? If you want to place a trend line, guys, if you do it this way, this is not like a good trend line. You guys should know it's not a good trend line. Then this is the only way you can actually do it. Okay, this is the only way you can actually do it. The reason being that you are connecting this high and you are connecting this one too. Okay, and you wait for the price to break at this zone before you start making entry. So if you must do this, even if the price is not giving you the best trend line or swings that you can actually mark your trend line, you can leave that one and wait for the next one. Okay, so like maybe some of us might be waiting, the price should kind of retrace back, touch here, push down, then touch here, then we'll be able to draw our trend line perfectly. So but you know, a trend line is simply a diagonal line that connects at least, okay, 2. So any line that connects 2 or more lower lows or lower highs, or higher highs or higher lows, is actually a trend line. So if you have a line that connects these 2 lows, this is a trend line. If you connect two highs is a trend line. So if you also connect more than that, is also a valid trend line. So we are just looking for two swing highs to connect or two swing lows to connect. So once you connect that, you have a valid trend line. So we still have this as a valid trend line, guys, right here. So you can still make your entry at the break of this trend line, which is at this zone. So this is simply what you are going to be doing. So let's dive into how you can actually make or take this trade using anything like, you know, other ones, in terms of whenever you if you see it without that consecutive bearish or bullish candle, depending on whatever the price is doing, can you still take the trade? Yes, you can still do that, but you should know that we are looking for best setup, guys. We are looking for best setup that will give us that edge over the market, right? We are looking for best setup, so that's the reason. All right, so if we check right here, okay, let's see this one. Okay, so let's see this one. You know why I'm just focusing on buy is because the price is trending up. That's why I'm here. Okay, because the price is trending. If the price is trending down, we should be looking for sell opportunity. Okay, so you have this one, but we don't have the consecutive candles. So can we still take this? We go down to lower time frame. Okay, we go down to 15-minute time frame to see if we can still get an entry using this one without the consecutive candles I'm talking about. So you can still do this, but I prefer waiting for the best setup. But if you wish, you can still make entry connecting these highs. Okay, the first high, the second high, you wait for the price to break out from that zone. So if the price breaks out, then you make your entry. As simple as that. As simple as that. If the price breaks out, you make the entry. So if I go to 4 hours, because some people might be saying at this point that you are having breakout, I think the price is still at the zone, like the price is still at that 4 hours time frame. But the truth is that if you check how I'm marking it on 4 hours, you will notice that I actually shift. If you look here now, if I'm marking it, I do drag it to this end. Okay, because that's how you can get the full body. So we are adding some few candles from the current candle, if this is just the current price action. So we are adding like few candles there. So the breakout happened within this particular 4 hours candle and to the next one. Okay, but basically within this 4 hours candle. So you are getting your signal, the right place, the right time. Okay, so but you know, that's why you have your account, that is your trading accounts to test on. I mean your registered derivative account, whether it's demo or real account. Okay, to test all these things to see how it works. So guys, that's basically how to do this one. And I'm going to be bringing back the, you know, I've not talked about bearish engulfing. That's where I'm waiting. I know a lot of you might be waiting for that one. That one is mad. I want to bring it towards the last episode, but it could come anytime anyway. Just stick around and don't forget to like, share this video, and also subscribe if you are new. Remember, I have a Telegram channel where I do chart breakdown like this, rough signals for free completely. So you can click the link in the description of the video to join the Telegram channel. So if you also you have not started trading already, you don't have a real account, or you don't even know how to start, you are not seeing crash and boom, you are not seeing volatility, you are not seeing step index, jump, range break, the broker that offers this derivative, I will leave the link also in the description of this video. Just click the link to sign up with them, and that's the broker I'm using for this. Okay, so guys, I'll see you guys in the next one. Hope you enjoyed this. Bye for now, guys.